In this week's video, we're going to be covering reporting season here in Australia, the big four banks, and whether interest rates may rise. Hello, I'm Dale Gillham, Chief Analyst here at Wealth Within. And for those of you who've been watching our market reports on a weekly basis up till now, you notice today's report will be a little bit different. We're covering more of a market update rather than a commentary and then a market update. So please put your comments down below. If you like today's report, please also said, put your comments down below. I'd love to hear your thoughts on that. Now, remember to subscribe to our channel so you keep up to date. So hit that red subscribe button and a little bell on the right-hand side that lets you know when we're uploading new videos. If you're new to the channel, welcome. I hope you enjoyed this week's report. But for now, let's get into the report. Now, with reporting season underway, we can see how the aftermath of the Royal Commission is still working its way through the financial services sector. Now, in its half-yearly results, National Australia Bank reported revenue growth at just over 1.4%, while expenses are up 1.7%. Now, its earnings also included $525 million in customer-related remediation costs, and this resulted in an interim dividend being cut, or its interim dividend being cut by 16% from 99 cents down to 83 cents per share. Now, ANZ, on the other hand, reported a 2% increase in cash profits and held its interim dividend at 80 cents per share. Westpac is the other bank, and they're reporting today, so watch out for that. But they've already advised us at the market or of an additional $260 million in remediation costs, adding to a total profit downgrade of more than $750 million. Now, based on this, you really would think whether you should stay clear of the banks. But as Mr. Buffett says, buy doom and sell in boom. So whilst the banks have been falling since early 2015, they have been trading up this calendar year, with ANZ performing the best, up over 11%, followed by Westpac up around about 10%, NAB up around 7%, and Commonwealth Bank about 3.5%. So we will look at those stocks when I get into the charts. But you might be asking, am I bullish on the banks? Well, I'm getting really, really close to being bullish on them, as I think these stocks will do well in the second half of this year, just not quite right now. And over the coming years, I think they will be bullish as well. Last week, AMP also reported a $1.8 billion net outflow in its cash flow update for the first quarter. Now, whilst its shares are down over 8% this year, I believe it is actually starting to turn. So it's giving me some signs, and we will look at that chart as well. So we may see a different story in the second half of this year. But right now, stay out until we know a little bit more about what AMP is actually doing. Now, with the RBA set to meet tomorrow, so that's Tuesday, it's highly likely we could see an interest rate cut. Now, prior to our last federal election, the RBA cut rates on the basis of global growth figures and lower inflation levels. Interestingly, this is quite similar to the situation we currently face, with inflation at lower than expected levels and strong performance in the global markets. Now, that said, with a fragile housing market and a fair bit of political uncertainty going around, I believe it would be wise for the RBA to actually hold interest rates right now, but only time will tell. Now, leading the way in the top 200 stocks last week was Afterpay Touch. Now, I know a lot of you are interested in this stock. It was up 13%. Bravura was up nearly 9%, and Nine Holdings up over 8%. This week's worst performers, or last week's worst performers, have been Pendle Group. They were down nearly 12%. Domain Holdings were down 10%. And Super Retail were down nearly 9%. So let's get into the charts to see what I expect in the market over the coming weeks. And we'll also cover those stocks that I just mentioned.
Please remember that this report is an educational tool, and as such, your personal circumstances have not been considered in the analysis of the compilation of shares included. The content of this report cannot be considered personal financial advice. If you have not done so before, pause the video and read the disclaimer on screen. We hope that you enjoy this week's report.
All right, what an interesting time it has been on the marketplace. Obviously, with reporting season, it does create a little bit of volatility in the market, but I have been expecting a pullback on our market for 1 to 2 weeks. But on the screen, I've got a monthly chart of the All Ordinaries Index, and I'll just put my glasses on, and you'll see here how their previous high, or more recent high back from August 2018, at 6,481.3 points. We got really, really close to that at 6,471.9. And last week, which was the week ending the 1st of May here, we've got up at 6469. So we're almost breaking through that point. Now, this is a monthly chart, remember, not the weekly chart. So May so far hasn't broken above the high of April. Now, over on the left of the screen, you'll see our previous all-time high, which was set on that 1st of November there at 6873. So we're roughly about, if I use my little tool here, we're roughly about 5 or 6% away from that. You'll see here we're nearly 6% away from that. If I go to the close so far, 6.5%, we are very, very close to breaking into a new all-time high. I think we're going to do that this year. I think we're going to do that possibly by mid-year, but only time will tell on that. But it is looking good. It is a fairly reasonable level there, but I want to bring up the weekly chart, just have a quick look at that with you. And you can see here how last week where our market opened on its high and really nearly traded down onto its low. Now we've got 1, 2, 3, 4, 5 weeks there. I do expect at least 1 week down, and it probably will come down sort of into that sort of level there around that 6372 point mark. So I think we'll get at least 1 week down, maybe 2, and then turn around and start to move up. So because the reporting season's over 2-3 weeks, so we might get that volatility at this point in time, but again, the market is looking bullish. I said, right now it is just a really short term, 1-2 weeks down. I think we're going to move up into May, June, and then come down into a low probably early to mid-July, maybe late June, but somewhere around there. That'll be the next more major low we're going to have, maybe 3-4 weeks down into that one. But right now, at this point in time, I do expect to break through those highs of last week, that's 6477, and move to try and push through to that new all-time high. So let's go and have a look at the stocks for this week. Now, bringing up there's a gentleman who bought, and who was it? Matthew Kennedy, I think it was. Matthew said, hello, I bought AWC in 2012. Puzzled about the stock price. Dividend is okay. Now, 6 years to hold a stock. Now, that's a long time in my book. I don't think I've ever held a stock for 6 years, but I understand people do that. They buy and hold, and I don't think AWC is that sort of buy and hold stock. But you can see here on the chart now, the left-hand side of the screen is a monthly chart. Right-hand side of the screen is a weekly chart. But looking at this, if you bought this back in 2012, somewhere in there, you would have bought it somewhere in around that sort of 60 cents to somewhere in around about $1.29. You really haven't done that well in terms of capital gain in the stock. Dividend is just a bonus. It's not something that you'd ever rely on for that. But right now, the stock's looking all right. It's moved off this major low way back here, back in 2012. So you bought it at the right time. So it's more, looking at that going right back to the history. That's a massive low back in 1984 at 64 cents. And we go to here, we're talking about 63 cents. There's only 1 cent difference in there. So that was a massively good time to buy. If you got it around that, if you bought it in around $1, it's that's okay. It's still a good time to buy that stock. I think we're just having a bit of a movement down. I wouldn't be too worried about this stock. AWC is a good stock. If it does fall below that, then that $2.12, it might go a little bit further, but it might come down sort of, let me use my little pointer, and I'm not going to put too much in terms of technical analysis on it, but you never know, it might go down to sort of that $1.50 sort of level into that sort of 180, 190 sort of level there. So, but again, you need to have rules around this. If you've bought in there, you're actually making money, which is great, but what are your exit strategies? Now, this is a monthly chart. So if we go to a weekly chart, there are a number of exits on that in this period here, right through here and down into through here, and even through here that we teach just on our basic course, on our trading mentor course, that we teach you to protect your capital, and you wouldn't even be in this stock right now. But given you probably are still in this stock right now, is looking a little bit bearish last week. So it's possible it will break through that. I'm not telling you to buy or sell this sort of stock. I'm just saying if you're one of our students, you would have already been out of this a long time ago. You actually would have been out of it last year, probably somewhere in around about this sort of area, about mid last year, and you wouldn't have been playing at this point in time. That's the value of a good education and having rules around things. Now let's get into the next one. This one is from Sunhill. Sunhill basically said, hey, can you look at Caltex one time? That's fine. I look at it more than one time, but I'm happy to look at it this time. So let's have a quick look at Caltex. This is another one that's looking a bit bearish at the moment. You can see they're on the monthly chart, 38.81 from March 2015. And 2016 it was 38.88, and it's been trading down since then, but it is looking a little bit more bearish. These sorts of companies are at this point in time, but this could be a nice little sign that it's going to start to move up. So Caltex, right now, I don't know whether you own it or you don't own it. It does really help me that to help you determine what you may be doing, but right now it is this low here is higher than that one there, which it really sort of, it could be doing another one of these sorts of areas here, but I doubt it. We need to see here whether it continues to fall away, and if this low is not broken here at 25.42 over the coming week or so, then I would suggest it was going to start to move up, and it might break above that 28.01. So right now it's 50-50 whether it's going up or down. This is a really nice sign, a nice sustained move. It didn't do that this time. This is a really nice sustainable move, so I'm sort of more leaning to be a little bit more bullish. But right now, it is 50-50 at this point in time. Now I'll just have a quick flick through the banks, because we did talk about that in the earlier report, just to show you what I'm talking about with the banks. You can see how the bank's all-time high. Here's NAB down here at November 2007. 42.66, and obviously that's that sort of early 2015 point that I was talking about, how the banks were going down. But you can see here on a monthly basis, NAB has actually, it's performed reasonably well. If I can drag that across, come on, let me get there. So you can see here over the past few months this year, or the banks, you'll see this on all of the banks, they are moving up a little bit. But then they did that through from 2016 through, so it is a longer term sustainable move. That's what we look at, but this is a nice looking sign both on a weekly and monthly basis. So again, here's Westpac looking a little bit better here. You can see the same thing here, just moving up since that low there back in December. So both, again, moving up nicely. It is interesting to see whether this will keep moving. Again, another one, all ANZ. Now, this was the best performing one we said this year, ANZ up 11%, but not quite there yet. So that's what I'm saying with the banks. They're looking better, but they're not necessarily exciting enough for me to jump on into them. And CBA, the last one here, that one didn't fall as much from this point here. We've got the March 2015. You can see the others fell a lot heavier, whereas the Commonwealth Bank actually didn't. It's done a bit better than that. So I do like this, but it's been the best performer this year, only 3.5%. So this thing will play catch up, and it probably will do better. So out of all the banks at this point in time, this is probably my preferred one if you're looking at buying a bank. But again, right now they're not necessarily something I'm strongly bullish at. Now, quickly just looking up at AMP just to finish off. What I was saying there with AMP, having a look at AMP on a monthly basis, you can see here how it's reached its all-time low just recently. The recent price movement down here on the right is its all-time low. So this is really high risk at this point in time unless you know what you're doing, because that is the all-time low there at $2.07. But that said, eventually this is going to get too cheap. That's really, I suppose, the words that you guys use. Often people say to me, I want to buy it because it's cheap. I never buy stocks because they're cheap. I buy them because they're going up. And that's about having rules around that. Right now, it's not going up. It's telling me it's going down. But it's giving me some signals that it may start to move up in the not too distant future. Now, that could be 3 months, 6 months, or even 12 months. It could even be a bit longer, but I need to see it. But it's one I have on my watch list because it could be a nice little move there. Because when it does move up, it does trend well, and it's a nice, easy trade. You can see these nice moves that it does up here if you have the right rules. So that's it for me for this week on the market report. So if you have any stocks that you'd like me to look at for you, please post down below in the chat thing. Just say, hey, Dar, have a look at this stock. Please also tell me why you're looking at it, what you want. Do you own it? Do you not own it? Because that really does help me. And I know most of you ignored that, me asking that question, but I really do need you to do that for me because it really helps me to give you better help in understanding the market and the stocks that you're doing. So, but for this week, goodbye, good luck, and good trading.